Hello, ladies and gentlemen. First of all, let me say thank you for taking time to attend this meeting where we're sharing our predictions and views on AUD/USD. Now, I know all our times are precious, so let's just jump right into it. Based on our analysis, in the next 3 to 6 months, we're going to see the Australian dollars appreciate against the US dollars. Here we are looking at some of the historic data on this currency pair. According to today's market, we are trading just a little below the actual price. So the question here is very simple. What makes Australian dollar move? We'll be addressing this question with different areas and factors, but let me start by talking about its correlations to Asian currencies. As you can see here is a quote from Commonwealth Bank of Australia. Australian dollars are heavily influenced by Asia, in particular the Chinese yen. One of the reasons being China is the biggest importer and exporter in Asia, or if not the world. Not only its movement can impact the AUD market, it can also play a big factor towards the price of USD. Hence why Commonwealth Bank has made its claim. On top of that, we would like to bring your attention to this chart. Here we have our normal AUD/USD weekly price chart. However, at the bottom, we have the correlation coefficient index paired up with CNY/USD. This tells us with the number 0, meaning both pairs are completely irrelevant, it bounces between negatives and positives. At most times on a 0.8, if not the highest number 1. It really brings out the fact that these two instruments are heavily positively correlated at most times. In other words, when the yen moves, the Australian dollar moves with it. Now this leads to our main point here, the trade war. As I'm sure everyone here has heard about the intense situation between China and the US, we won't go into the details on what happened here, as most of it has covered by the news. However, we will talk about the impacts that has already created upon the price actions. Here we have our normal daily tweet from Mr. Donald J. Trump, tells us why he promoted such acts against China. Notice the day here is 9th of April 2018. Now, on the same day, look at what the market has responded with. Notice the days here, the same date. The market responded with a huge sell-off of US dollars. As we can see in the chart of AUD has had a massive bull run as commodity currency. This can be seen as a strong evidence on how this exact movement can be extended towards the near future. Now let's look at the price index from a technical point of view. We can see that currently on the weekly chart, we just made a double bottom at the support level, 0.684, and began an uptrend. The reason we see it as an uptrend instead of consolidation is that the price is not bouncing within the channel like that, but making higher lows. So we can see from here, here, higher lows, and constantly hitting the bid wall, or so-called resistance level, and forming into a ascending triangle. And not only that, after several attempts, the price has actually penetrated the strong resistance at 0.77, which now will serve as the new support level, according to the methodology that the past resistance always becomes the future support. So on top of that, if we go into our live chart here, this is live action, live price action at USD/AUD, or excuse me, AUD/USD on the weekly chart. Now, if we zoom in, or so-called we zoom out to show you that it is the same graph, and now we zoom back in to the most recent period, and we go to our toolkit and find Fibonacci retracement and apply it to the price index and draw a graph. We can see that, if we can see closely, that the price actually just recently touched or retraced back to the 78.6 retracement level on the Fibonacci retracement. What does that mean for us? It means that if we are anticipating that this is still an uptrend and we want to buy into this, but we don't want to buy in at a market top or potential market top, we want to buy at the best price possible. So what do? We'll wait for the price to retrace. And at the 78.6 retracement level, It's currently bouncing back up and closing to 61.8. That actually is really not a bad price to buy. So that's another reason that we believe that this is an excellent opportunity to get in and buy USD as it is anticipated to keep on rising. Well, now we'd like to take everyone back to the slides and talk about inflation. The current Australian annual inflation rate is 1.9%. This means that the general basket price of goods and services, all of them sold in Australia, has risen by an average of 1.9% since the same time last year. Comparatively, the United States of America has a current inflationary rate at 2.36%. So what does that mean for us? This means that as the lower Australian inflation rate will cause a shift to the right in the demand for export, American companies will now start importing more from Australia, simply because goods and services are way cheaper than purchasing them straight off the US soil. And on the graph, we can see that Australian export to US over the past year has increased. So right here. Thus, with more foreign investors seeking cheaper price due to Australia's lower inflationary rates when compared to the USA, the demand for AUD will increase. According to the basic law of supply and demand, we can safely assume that the increased demand for AUD will increase its value by making it appreciate against the US dollars. Now, relating back to the trade war and how it affects the GDP, there is a possibility that the Australia's GDP would rise, which will then cause an appreciation of the Australian currency against the US. We will explore some of the industries that could benefit from the trade war and its correlations in just a minute. Australia has ample room and need to diversify its over-reliance on US money. According to Australia's Department of Foreign Affairs and Trade, the US tops the list of foreign investment in Australia, with a 27% of total value by country, which is a level 10 times bigger than the Chinese investment. On the other hand, Australia capital mostly flows out to the US, which is 28% of total value, and not very much to China, with only 4%. It's handy for Australia that the US Trade Representative has flagged new restrictions on the Chinese investment in the US to contain China's stated intention of seizing economic leadership in advanced technology as set forth in its industrial plans, such as Made in China 2025. This means more investment spillovers are likely to flow between China and Australia with more favorable terms. The previous course may have proven that the Australia's product is a strong substitute to US products. For instance, when US wine imports to mainland China declined last year, Australia's rose 63% to 848 million. In the mining industry, Australia has seen its export of waste material rise sharply since the 1990s. In 2011 and 12, China was Australia's biggest trading partner for exported waste products, receiving 602 million worth, or 31% of our waste material exports. The Asian state is also a massive importer of met coal, which is used in blast furnaces to produce steel. While the US is imposing a 25% tariff on steel imports from China, the Asian state may decide to source more of its met coal from elsewhere. As one of the world's top exporter of coals, Australia could recap the rewards. Lastly, here are some of the sources that we used for this presentation. Again, our prediction is that AUD will appreciate against USD for the next 3 to 6 months. We have based on our arguments from fundamental and technical analysis, including GDP, inflation, news, historic data, charts, and a lot more. Hopefully this has been an informative yet fun session for everyone. Thank you all for coming.